Yo, what's up, YouTube? Welcome back to my channel, New FX right here, and welcome back to the episode 4 of the NOOB to Pro series. And in this video, I'll be teaching you guys premium and discount pricing. So make sure you watch to the end, see the video, and make sure you like and subscribe. So guys, welcome back. We were talking about premium and discount pricing. So what's premium and discount pricing? I think premium and discount pricing simply means the rate of which buyers and sellers come into the market or get out of the market. And these things actually apply to the first market because the first market actually complies or consists of buying and selling, right? So normal thing applies to buying and selling in the normal market is actually what we call premium and discount pricing, which actually same thing do happen in the forex market. All right, so now let's give an example of probably I want to buy something from you. Or yeah, let's use a very popular example like the USD NGN. Or okay, let's say the naira to the USDT. All right, NGN USDT. So let's say you have 100,000 naira, right? Why 100,000 naira is very much equivalent to $100, right? So now let's say you now buy 100,000 naira worth of USDT. Okay, you will actually need the price to actually go up. I mean, to go to a very much premium pricing, and I basically this premium and discount pricing just when you get into the market and when you get out of the market for you to make profit. All right. So when you say I buy 100,000 naira worth of USDT, which is very much equivalent to $100 USDT, that simply means I am actually buying from a discount price and I am anticipating a premium in price. I mean, waiting for the market to go up, then I sell the USDT back to Naira for me to make profit. Same thing applies to the vice versa. I mean, if you actually have $100 worth of BTC, what $100 worth of USDT, right, and you want to transfer it or change it to Naira, or you actually want to invest in Naira because maybe you're anticipating the Naira going up, probably in the nearest future, right? So you change the dollar to the Naira. So when Naira goes up, I mean, when it goes a little bit premium, you will be making profits. Probably, let's say the market now go 20% up. That means you're making 20% of your investment, which is basically $20, right? So now you can now sell that back at premium for you to make profit. All right. So same thing happens in the forex market. Okay. But then these things is not really done by us. It's been done by the market makers. I mean, those big boys that actually, you know, control the market. So let's say we are buying from here, right? We buy from here. Let's say we buy from here to this level. All right. Now let's say this is 100 pips, right? 600 pips. This is a very much normal phenomenon in the market that the market don't move straight. It do moves vice versa or vice versa. Why does the market moves vice versa? Now I'll tell you guys the psychology behind the market moving vice versa. Now let's say the market is very much bullish and we actually buy from this point right here that I marked. I mean from this point, you buy to this point. Right. A lot of sellers, a lot sorry, market is bullish, a lot of buyers actually will want to join the market, but they wouldn't want or they won't like to join the market when the market is already, when the market is already in a premium price because now for the market to jump from this stage to this stage, the market has gone up a little bit whereby they can't really join to the market just exactly like that. They need the market to come to a discount price so they can buy at discounted price and then the market will move back to premium. So basically when that things happen, you will see when the market makes correction. So when the market makes correction, the market is now back to discount price. Any other buyers or any other market makers that want to get into the buy will take their trade off from this discount price for it to go back to premium so they can make profit. I think guys understand the psychology behind the market giving an impulse retracement right now. So now you see like the market go back to premium again by taking out this. I can see that basically a break of structure has actually happened at this point. So now the market go back to premium. If they want to join the buy again, they will need the market to come back to discount price. Okay, so they get into the trade again. Market boom. Sorry, market actually goes up back to premium buys again. Another break of structure to the upside. So this is basically how these things works. Let's say we are here. Price is actually $50. Then market buys up to $100. Right? You can't just buy up from the $100. They need the discount price. Like market just trade back to probably like you know, maybe $50, $40, $30. So they can actually buy from that $30. So when the market goes back, now this is $100. Why the market go moving up or higher than this one? So this might be like $150. So the market's moving from $50 to $150. That is basically $100 profit for them, right? They actually bought from discount and they take profit in premium. Same thing happened when we're talking about the bearish market scenario. All right. Now let's say the market is very much high. All right, the market is very much cost, and you have an investment right here. Okay, you have a very nice investment right here. So now before you get into the market, now let's say the market has already sold. Right, the market has already sold. Okay, the market has already sold right here, and you actually want to sell too, right? You want to sell. You can't just sell when the market is actually giving a trending price. I mean, the normal trend. Let's say this is actually the market, they are selling USDT right here at $100, but then USDT has now dropped all the way down to $50. You can't just sell USDT from $50 because you are making an investment. You are investing. You need to make profit. So you need to wait for the market or to the USDT price to come back to probably like $70. So you can sell your BTC at this point at premium price. Then market goes back again. Right. So for you to sell your premium, for you to sell your USDT at $70, you make profit, right? Because you really don't sell when the price is at around $50, right? You make additional 20% because you sell when the market goes back to 70% of the price. All right, now it's just like buying and selling. Here the market is actually buying. The market is going to the upside. You are buying, but then you need to buy at discount price. And here the market is going down. Market is going to downside, market is going downtrend. You need to sell at premium price, right? You need to sell at high rate so you can make profit. And if you want to buy, you need to buy at lower rate so the market can go up and then boost your profit. So you guys really understand the explanation between discount and premium pricing. So now, how does it affect the forex market? Now let's get straight into the chart and let me show you guys how these things happened. Okay, guys. So you guys can see in the 3-hour chart on Nasdaq, you guys can see that we are pretty much bearish. All right. So now you guys can see that the market actually sell from premium to discount, come back to premium, go back to discount, come back to premium, go back to discount. I mean, the market is actually very much bearish. The market is going down, like the market is very much selling, right? So how do you know the premium price and how do you know the discount price? When we're talking about bearish market, you should know that you should be eyeing the premium price, like you need to sell from highs, then you make profit or take profit at lows, right? When the market is selling, you need to sell from highs and then you make profit at lows. So now you should be looking or anticipating premium price when the market is bearish. Why you should be anticipating discount price when the market is bullish because you need to buy at low rate and then you sell at high rate. Right? Very much simple. Exactly how its name implies. Right. So now there's actually a tool that we use to identify the premium and discount pricing, which is Ganbox. You can use Ganbox and you can pretty much use Fibonacci too. Right. So what is Ganbox? Ganbox is basically just a normal tool in the forex market on trading view that actually mark 50% of anything that you mark with it, which is actually something like this. You guys can see that I actually mark this one from this high to this low. You guys can see that I have the 50% right here. So this is basically the Ganbox. All you just need to do is just go to your tool, after you go to your tool right here, you come here to measurement. All right. Okay. Oh, okay. All right. You come to Fibonacci here. The Fibonacci right here. You guys can see that GAN box. You guys can see that I have my GAN box right there. So you just need to click on the GAN box and then you mark the GAN box from the high to the low. Right. Then you have the 50%. So if you have 50% right here, above the 50%, anywhere or any price above the 50% is where we call the premium price. All right, anywhere above the 50% is where we call the premium price. So now when the market as markets sell from here to this point right here, you can actually sell from anywhere in this box, right? Because anywhere starting from the 50% above or the first 50% of the trend will be the premium price. So you should be selling from anywhere from the premium price. So now this doesn't mean you should actually sell whenever the market is negated or whenever the market comes back to the premium zone. This actually will serve as a confluence because you should be selling from supply zones that are in the premium price or the premium region of the trend. Right, you should be selling from premium supplies. Right, when if you want to buy, you should be buying from discount demands. All right. So now you can see that actually when the market mitigated the demand, the supply zone actually mitigated the supply zone that is actually at the premium price. It's actually which is this supply zone right here, right? Which is the supply zone right here. You guys can see how the market mitigated this the premium supply zone, then boom, see downside. So another thing, another trend right here gaining because you can see that we have a break of structure right here. The market take out this low right here with this very much move. Then you should actually measure it again, right? We have this high to this low. So right now I am using the Fibonacci tool. Right. So all you just need to do in the Fibonacci tool is just to mark out the 50%, just to tick the 50% alone. So when you use the 50% alone, I mean you should actually take out the 61.8, the 70%, the 0.34 thereabout. Just take everything out and leave only the zero point 0.5, where the zero point 0.5 or this one will be showing you the half of both sides, right? It should divide the viral trend by half, right? By two. So you have two halves. All right. So the first half right here and the second half right here. So you should know that anywhere or any price above the first half right here will be your premium price in which you're looking to sell. And you can see how the market mitigated something at this point right here and sold down really hard. All right, sold down really hard. So same thing or same scenario happening in the current market price right now. As you guys can see, you guys can see that we actually moved from discount back to premium. Then we should be going back to what discount price. You guys can see that we actually have a very nice low right here and a low right here. This low block structure, so we'll be expecting a sell from anywhere in this point, right? We should be expecting a sell. But then you guys can see that the market actually retrace back to the premium pricing before giving any sell. It traces back to the premium price and then it will mitigate the supply zone right there before it sells to the downside. Pretty much simple and straightforward, right? So now let's find a trend for the bullish scenario. In the bullish scenario, we'll be using USD card. All right. So you guys can see that USD card is pretty much in a bullish trend, right? So same rules applied. We should be looking to sell. I'm sorry, we should be looking to buy at demand zone that is at the discount price. All right. We should just be looking to buy at discounted demand zones. So first thing first, right? We have a low right here and a low right here. As you guys can see, we have a low right here, the low right here, and the high right here. So now you can see that we have the low 50% right here, right? We have the 50% right here, which will be from here to here. So you guys can see this one is very much a mitigation to exactly the 50% that then buys off, right? It buys off right actually after the mitigation. So I'm pretty much sure that there will be a demand zone that market mitigated right here in the lower time frame that's created or that gives the buy spaces. But then it's fine, right? You guys can see that even though it's with weak, the market actually mitigated the discount price with weak. At least it's touched the discount price before going to the buys, right? Same thing happening in the current trend right now. As you guys can see, we actually have a low, right? You guys can see that we have a low right here, and we have a high, right? So here's the 50. Here's this point right here below is the 50% of the trend. So here should be the discount zone, right? As you guys can see that the market actually mitigated. The market actually mitigated a discounted demand zone right here, and what it's now buying, right? You can never see a very valid trend continuation that will continue at premium demand zone. No, the market actually needs to give a proper retracement back to discounted price before actually going back up, and vice versa if the market is selling. So you guys can see pretty much how simple this thing is, and you can see the major reason why the market gives impulse and correction in the forex market. All right. And I think you guys really understand this. You guys should just go to your chat, mark test it, back test what I just taught you, teach you guys in this video, and make sure you master it how to trade premium and discount pricing. So now the rule is don't ever trade a premium demand zone and don't ever trade a discount supply zone. All right. So that's just how simple the rule is. And if you follow this one, you actually see how your win rate to skyrocket. Trust me, right? This is actually a thing that has been there for decades, like years and it keeps working. Why? Because it actually deals with economics. It deals with buy and selling. You can never buy something when the price is high. You need to wait for the price to come down before you buy. And you can never sell something when the price is low. Of course, you need to make profit too, right? And you need to wait for the market or the price to go up before you sell so you can make decent profit for yourself, right? Because we are all entrepreneurs, right? No businessman we want to make loss. We all do business to make profit. So this is basically how the thing is. It's about economy, it's about buying and selling, and it is about making profit. No investor want to make any loss. And I think that'll be all for this video, guys. Make sure you like and subscribe to my channel. And I appreciate you guys. I actually hit 100 subscribers lately. I appreciate you guys for the support. Just keep supporting me. Like this video, comment down below, and subscribe to my channel if this is your first time in this channel. And as you guys can see, that I use suppliers and demands in this video just to explain premium and discounts pricing. You guys don't really know what suppliers and demand zone is. I mean, I have not really talked about that in this series, but then anticipate next upper video that I'll be dropping. I will definitely be talking about suppliers and demand. So you guys just chill, and yeah, let's just keep it simple, keep it slow, and like keep it steady, consistency. So see you guys in the next video, guys. I'm Midi Rich FX. Make sure you like and subscribe to my channel. Share this video to your friends and loved ones that you really want or care about so they can learn. And see you in the next one, guys. Peace.